Traders, Greg here with a market update. Okay, so volatility is back, and it's back in a big way across all asset markets. These are very, very dangerous markets. But let me start off by just talking about a new narrative, a new theme that this market is trading at the moment, and that is sell USA. So sell US equities, sell the US dollar, and also sell US bonds. The reason for this is quite simply is that the market has lost confidence in the USA, lost confidence in Trump and Trump's tariff policies. That these policies are going to impact on US economic growth in a big way, so big slowdown in economic growth. Recession fears are certainly very realistic. And the worrying bit about this is that obviously this is going to happen with higher prices, so stagnation, higher prices from the tariffs. And also worryingly is that we did recently hear from the Fed's Powell, where he basically said that their hands are tied, that that he has to see how the tariffs impact on inflation. And obviously they have a price mandate, and he certainly cannot be cutting into prices going up. So yes, in a nutshell, we've got a market that is certainly very worried about what is happening in the USA. And certainly at the start of this week, we were trading the sell USA theme. Now, even though that is like the prevailing narrative that is in the market at the moment, obviously we do have a market that is also very headline driven and will react to headlines, and we did see that after the market closed this morning and before the reopen in Asia. We got some headlines from Trump. A couple of things from Trump. One is that he basically said that he is not going to fire Powell, so backtracked on some of the headlines where he was obviously looking forward to getting rid of Powell, which was something the market was certainly very worried about. And he also softened his stance a little bit on China, basically saying that he was going to be nice to China and that they had to get a deal done. And obviously when they do, the tariffs will be a lot lower than 145%, but they would not be zero. So on the reopen of Globex, we saw some massive gaps. So obviously risk was bid on the back of these headlines. Okay, so if we just go through some of the markets, if we look at US equities, the top side for US equities, probably where we're going to see a firm ceiling. S&P is probably around about that 5,500 area, and for Nasdaq's probably around about that 19,500 up towards 20,000. We aren't going to get any resolution imminent anytime soon with trade deals. We've just recently seen that one of the US's closest allies, Japan, was at the White House, and the Japanese delegation left without any deals done. So it just goes to show that even with the closest allies, if they're finding it hard to make a deal with China, and that's the big one the market's waiting for, is going to be a long time coming. So yes, we are in a sell rally, so suggest bias at the moment, and with a very firm topside ceiling that is certainly going to cap this market going forward. And in the coming months, if obviously we do get that slowdown in US economic growth and we do see inflation start to spike on the back of these tariffs, these US equities are going to be going a lot lower. As far as the US dollar is concerned, look, the dollar index on that sell USA theme, we did see the dollar index trade decisively below 100, down towards 98. But look, we haven't made a big break with momentum yet. We're still trying to basically break 100 decisively on the dollar index. So there is a bit of choppy trading there, but certainly bias again is selling the US dollar on rallies. If we look at the US bond market, It's the long end of the curve that basically the market's looking at very closely. So you're looking at the US 10-year bonds and US 30-year yields. US 30-year yields, the market there closed around about that 4.9% area. We did trade higher than 4.9 yesterday. The big level that highs we saw recently was up around 5%. I'd suggest if those 30-year yields do start trading above 5%, that's going to stress the market. You're going to see headlines, not good for equities. US 10-year yields, they're around about 4.4%. So they're a little bit off those highs of 4.6 where the market started getting pretty stressed. So again, watch those yields. If they start to continue to trade back up to those sort of levels, it's going to be stressing the market. Okay, another market that's seen some very big volatility but has benefited from the Sell USA theme, trying to diversify away from US assets, obviously gold. So gold did trade up to 3,500 yesterday. This is a target that, look, the market, no one in the market thought that we would get to any time, well, as quickly as what we did yesterday. But as we've been talking about, a lot of volatility, dangerous markets. We have seen a big reversal, and yes, these headlines that we've seen this morning from Trump has also impacted on the gold market. And we've seen a sell-off in gold from the 3,500 area, gap lower on the reopen today, and we're back trading around about where we opened the week, which was around that 33.30 area. But certainly, look, the longer term targets for gold and for the analysts and for the market is certainly still a lot higher than that 3,500 level that we reached, those new record highs yesterday. And I don't think fundamentally much has changed, or even technically at the moment, to say that longer term, yes, gold is still going to be a very good performing asset. It is just trying to manage these huge short-term swings, and knowing where the retracement will stop, whether it's around that 3,300 area, or maybe a touch lower. Look, I'd just suggest that if you are trading gold, maybe to size down on your position sizing, because that volatility that we're seeing at the moment is extraordinary, super dangerous. Besides gold, the other asset market that certainly now has perked up and is benefiting from diversifying away from US assets is Bitcoin. So it has now gone back above 90,000, and yes, is in that market theme of just selling USA, diversifying away from US assets. So yes, Bitcoin and crypto at the moment is bid and is starting to look quite positive again. Okay, good luck with your trades. Certainly be careful out there, super dangerous. Definitely maybe just scale back on position sizing. That'd probably be one of the best bits of advice that you can get this morning. And we will check back in again with you shortly.